Welcome to my live market meet 25th November 2020. I am Sagar Nandi. I used to work in IT. I retired now. I am swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on multiple channels. These are my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. If you can hear me and see my screen clearly, please let me know using the live chat panel. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Thank you, Mike. In this live session, I will use the same systems that I use in my actual trading. For technical analysis, I will use Q Elite on TradeStation, Q Finder running on Q Global, and Finder running on Metastock platform and Zenith Data. For fundamental analysis, I will use Q Vital. For sector industry rotation analysis, Q Edge, and market level index analysis, Q Index. In today's session, I will also use the latest versions of some of the programs. Let me open some of the programs. The latest versions meaning the market breadth addendum to Q Global, and also the latest versions of Q Finder. While I am opening some of the programs in parallel, I have to open few more things. Sorry about that. I was sitting in Starbucks and updating everything. I just came back home and I am opening the latest versions. Okay, let's continue. Start with the global markets. I'll go through the global markets quickly because I want to touch upon some of the finer enhancements of the Q systems. Australian market index AXJO continuing to go up above upper boundary, bullish but overbought. Is now overbought for many days, clearly bullish. Japanese market Topix index bullish but with an upper tail, less bullish looking than Australian market, above upper boundary, therefore overbought. Chinese market CSI 300 index in the last webinar I mentioned there was a go with flow trend following long setup on this day, and even prior to that, when price was around here, the candle color in daily chart was still yellow. I mentioned that I am anticipating a trend following go with flow long setup. At that time the weekly was bullish, daily went to the upper boundary and pulled back. The candle color was yellow, so I was already starting to look for a cyan color candle bullish flow that happened on this day, and that go with flow trend following long setup meet its initial profit target, that is the upper boundary level on this day. We would book profit at that time. Very next day it gave a bearish headwind signal, and today it fell down, the candle flow color turned magenta and it also broke below the trendline support. This illustrates a few points. One is that if you are watching an instrument for a while, you can anticipate a trade coming and take it precisely, not waiting for the close of the signal day but using fine-tuned chart. The second point it illustrates is when it hits the initial profit target using Q technique, we book at least partial profit. Third point is that when the bearish headwind signal comes, we are always cautious. Using that, you might exit full position or at least full, meaning the remaining position, or at least put trailing stop on the remaining position, and today you'd probably get out of the remaining position as well. Anticipating a trade in this way and taking it precisely, exiting with discipline, adds to your profit and also adds to your confidence. Hi Wadi. Next, global market, UK market, FTSE index. It broke out, moved sideways for a while. Today it displayed a bear release signal. The weekly color is bullish, however the shape is not so bullish. It is still in an uptrend. However, above upper boundary level, we are not going to take any new long position and there is no Q short setup as well. Indian market was the strongest of the global markets. Nifty 50 index. Let's look at that. It is still bullish, however this week's candle shape is now bearish. Today it displayed the bear release signal in the daily chart and created a reversal candle. Also it came down with heavy bearish pressure. If the price continues to go down from here, then you may look for shorting opportunity in individual stocks. Nifty 50 itself doesn't have any short setup. We saw all the global markets are still in an uptrend. However, last couple of days or at least 2 days, Asian market is already closed for the day today, that is Wednesday. Today's candles are not looking so bullish. Let's look at the USA market now. For that, I will use the Q Elite on TradeStation for looking at the ETFs. In Q Elite, you may use hotkeys to change the templates. This is S&P 500 ETF SPY. Yesterday, price broke out of the triangle pattern, broke out of trendline resistance, close near the watermark resistance and also close to the upper boundary. Therefore, though the flow color was bullish and the backdrop color was also bullish, we wouldn't take a go with flow trend following long setup. It is currently bullish but overbought near to the upper boundary. Nasdaq ETF QQQ, the daily and weekly both are bullish. Relative performance is showing that it is weaker than the other market ETFs. Are we going to take a go with flow long trade setup in QQQ now? Because it is a market ETF, we may look at the overall market and then decide whether to take a long trade. SPY was telling us that it is not the time to take a long trade. Let's look at the other market ETFs. DIA, bullish in weekly, bullish in daily, however overbought at the upper boundary level. Bullish overbought, we are not going to buy it. IWM, again weekly bullish, daily bullish. Yesterday's candle shape in daily is indecisive. very overbought, we are not going to buy it. Therefore, IWM, DIA and SPY are overbought, though QQQ is not. When 3 of the 4 market ETFs are overbought, we may not want to take a long trade in QQQ. That is my conclusion. Now let's look at the market futures also. At least few of them. This is E-mini futures S&P 500, and for the futures I am using Q Global. Weekly is bullish. Yesterday's candle is pretty bullish. Today in the overnight market it is creating a doji. Of course, overnight market doesn't tell us anything. The regular markets have not started yet. It is bullish but near the upper boundary, overbought. And if we look at NQ, yesterday was bullish. Today so far we have a doji candle. Weekly has trendline resistance. We may be careful and not buy any of the market ETFs or market futures right now. Now let me spend also some time on the market internals or market breadth. By the way, those of you who responded to my email about Q Global Market Breadth Addendum, you already have the market breadth addendum for you to download. I don't have it. I have not added it here. If you go to your custom download page, then you should have a new entry here telling not Q Global but Q Global Market Breadth. You may download it. I will conduct a webinar separately, or maybe I will record a session separately on how to install the market breadth addendum. Let's look at the market breadth data. Let's look at the composite indices. The version that I am releasing and I am using now, that has 1, 2, 3, 4, 5, 6. 6 panels. One panel is the index, custom index or composite index. In this case, these are the composite indices, Nasdaq and NYSE. The suggested interval is weekly. Of course, you are able to look at it using daily interval also. However, to make meaningful conclusion, you may look at it using the weekly interval. The daily interval for market breadth studies may be too noisy. At the top, there are the thrust and jump indicators, Q indicators. The jump indicator says how far it has moved up relative to its past history. When the red dots come, then it is very overextended. That's the maximum it had been in recent past. That is the jump indication. And thrust indication says when jumping to that high, how fast did it reach there? Again, the red dots mean that it went up with very high thrust. Maybe it is exhausted. You will see that when in the weekly, both thrust and jump hit the red levels, then it tends to pull back. Sometimes it may give divergence. The divergence shows that price might have gone up. However, it didn't go up with as much thrust as last time. You may find divergence in all the market breadth studies using thrust and jump. That is useful. Also, the internals new high low, advanced decline, up down volume may also show divergence or outright turning bearish before price actually drops. The market internal study in this way helps us anticipate when the market is going to drop, or at least tells us to be cautious, not keep on adding to our open long positions. As I showed in the last webinar also, if we look at the current market breadth using composites, then there was no and there is no bearish signal yet. Though the thrust and jump, they are showing divergence on both the composites. So that may be a reason to be cautious. However, as far as internals are concerned, the internals are not weak. If the internals are weak, then we have to be very careful. And these internal studies I am using for market breadth analysis, they are very powerful. Why? Because they have zero lag. New high low, advanced decline, up down volume, the way I am using, they have zero lag. New high low is the actual new high lows made, new highs minus new lows made in the composites here. And advanced decline, up down volume I am using as oscillator, moving between plus 100 to minus 100. Both for advanced decline and up down volume, they are oscillators. One way to use them, as I already mentioned, is to look for divergence, and the other way to use the oscillators is to look for extremes. If it goes to the extremes, we may look for a pullback. However, we are not going to short anything. We will short only if there is an actual reversal signal on the charts. You may look for extremes on the weekly interval, or for looking out for extremes, you may also switch to the daily interval. For divergence, you may use the weekly interval, that is more reliable. So the market composites, if you see, yesterday Nasdaq composite could break out of the trendline resistance. NYSE composite is also bullish, though it is approaching the watermark resistance. There is no sign of weakness in the composite market breadth inside as of yesterday. Let's now look at some more market breadth inside. And as I mentioned already, those who express their interest, you have the entire stuff ready for you to download now. Everything that I am showing is available for you right now. Let's look at market breadth using now the major indices. Again, I am using the weekly interval, and here I am looking at the major market indices. Q thrust and Q jump are there as usual. Now instead of new high low number, I am using new high low percentage. Advanced decline and up down volume are oscillators, as in the case of composites. Only difference between the composite studies and the major indices studies is this one. In composites, I am showing the actual number of new high low, and here I am using new high low percentage for the major indices, major market indices. Of course, whether you drew actual numbers or percentages, the plots will look similar. So there is not a big difference. We are not going to look at the actual numbers. That is not the key philosophy. We just look at the colors and patterns and make decisions. We don't like to read the numbers. So for practical purposes, whether it was new high low percentage or actual new high low number would not make any difference to us. If we look at Dow Jones Industrials, and now of course the new high low is only calculated based on Dow Jones Industrials. Same is true for advanced decline and upturn volume. Again, using the weekly interval, there is divergence between thrust jump and the price move. However, the internals themselves don't have any bearish indication. That means market breadth is still pretty bullish in Dow Jones also. What about S&P 1500, the broadest of the major market indices? Again, divergence in thrust and jump, but the internals themselves are quite bullish. S&P 500, same thing, divergence in thrust and jump. Market internals themselves are pretty bullish. And the last one, Nasdaq 100, same thing, some divergence in thrust jump. The market internals are pretty bullish. Now we may look at something else also as part of market breadth study. Again, these are ready for download. One is looking at the canaries in the coal mine. These has the stocks that are used by Dr. Jeffrey Scott in his webinars. I didn't try to create a new list of canaries in the coal mine, new list of stocks. I have high confidence on Dr. Jeffrey, and however did he get the stocks? I don't know, but I'm just using the same stocks that he uses. Here I am using the standard weekly daily at a glance template, and I am keeping the thrust and jump indicators. Weekly on the left, daily on the right. Canaries in the coal mine, the weekly is bullish, daily broke out of the trendline resistance after a long time. There is no divergence. We cannot see there is divergence in the weekly because the weekly did not make higher high, so there is no divergence. We can just say that it is not thrusting up so quickly, neither is it jumping up very quickly. Canaries in the coal mine is bullish. How does it help? The hypothesis is that these are very robust, very strong stocks. If they start to roll over, then we have to be cautious. Then the market may be in trouble. If the strongest stocks start to roll over, then the market may be in trouble or the uptrend may be over. Of course, we don't use the market internal study, all the studies I am sharing now, we don't use them as buy sell signals. For buy sell signals, we use the Q trade setups, go with flow, trend following, headwind reversal, bounce, exertion based reversal, and box for sideways or double top reversal. But market breadth information helps us to understand what is going on looking inside the market, not just individual stocks price move. And canaries in the coal mines also help with that. Other than canaries in the coal mine stocks, I created another index, that is the mega cap stocks. And here I didn't use arbitrary numbers. I used QH to look at all the stocks. I picked up the top 20 mega cap stocks. So this is mega cap top 20. And that index is also meaningful. Here the weekly precisely bounced up from the trend line support. The relative performance is showing that the mega cap top 20 index is weaker than the market, though yesterday it broke out of the trendline resistance. Daily flow is bullish, weekly backdrop bearish, therefore there was no go with flow long setup. Anyway, it is a composite index, mega cap top 20. We are not going to trade the index. If at all this index is going to give a valid trade setup, then we are going to look at the constituents of the mega cap top 20 and see which one is giving the proper buy setup. That may be a way to use the mega cap top 20 index. However, for finding trade setups, I rely a lot more on TradeStation Radar, QLE Radar, which for me, for my computer, can hold about 200 250 stocks at a time. If I try to put 500 or 1000 stocks, it crashes. However, my usual stock universe, which I have put in Q Vital, the liquid stocks, that has currently more than 2500 stocks. So I am not able to use Q Elite in real time to find the best buy short setups. For that I use Q Finder, and let's look at the latest version of Q Finder. Here the daily and weekly are now combined. Let's look at the weekly. I have run it as of yesterday's market close, Tuesday's market close. As usual, we have the signal statistics as of Tuesday's close using the weekly interval. 83% of all signals are bullish, 95% of strength signals are bullish, 83% of trend continuation signals are bullish, and 54% of reversal signals are bullish. So as of yesterday's market close, weekly picture is very bullish. We can see the major bullish dimensions. One is gap up, one is breakout, one is trend following go with flow setup. We already had the signal statistics and the breakdown of the signals. Now I have added few more charts at the bottom. These two pie charts are showing the price levels, that is pendulum or price extreme levels of the bearish signals and bullish signals. Normally you will find that the majority of signals come from the mid range. So 52% of the bearish signals are coming from pendulum medium, yellow color pendulum candle sticks, and same is true for bullish signals. Majority of the signals are coming from price extreme middle. If you look at bearish signals now, 44% of them are at price extreme low. What it is showing? It is showing that the weaker stocks are becoming weaker. The stocks that were strongest, price extreme high, they are not giving so much bearish signals. If you look at the bullish signals, of course majority of them come from the middle as usual, and we can see stocks that were at the bottom, they are also starting to go up, and stocks that were at the top, price extreme high, that pie portion is smaller. So of course medium range stocks go up and down the most, and we are seeing that stocks that were weak are also dropping. Stocks that were weak are going up as well. Which stocks are going up that were weaker? Those may be the energy stocks. What are the stocks that were weaker and still going down? I don't know, but using the drill down we can figure out. I will not go into that now. Let me explain the daily chart or picture also. Same thing as in the weekly. Let's read it out. In terms of signal statistics, as of yesterday, this is daily interval. As of yesterday, Tuesday's close for the day, 86% of all signals are bullish, 93% of strength signals bullish, 86% trend continuation signals bullish, reversal signals are mixed. So this picture is also pretty bullish. In terms of major bullish dimensions, gap up, trend following long, breakout long. So if you were going to use this high level view to look for trade setups using the drill down, firstly you would look for bullish setups, and secondly you might try to combine breakouts with go with flows, maybe even with gap ups, because those categories have a large number of stocks in them. It is likely that you will find stocks with all those or at least two of those three characteristics, and the more characteristics you are able to add, the more higher probability reliable the trade setups will be. Let's look at the lower pie charts. As expected, majority of the bearish and bullish signals come from the price extreme middle. What we can also see that stocks that were at a low level, pendulum low, price extreme low, they dropped. Also stocks that were at low price level, they also went up. This is similar to what we saw in the weekly interval also. One last comment on the two more bar charts. This is there for information. We are not going to find some trade ideas from there. What it is telling that all these signals that came, bearish signals and bullish signals, if you see the bearish signals, 234 of the stocks came down and gave bearish signal, and 8 stocks actually went up but still give bearish signals. In terms of bullish side, majority of the stocks went up and gave bullish signals, and only 2 stocks went down and still gave bullish signals. Are we going to find trade setups from there? No. Why? Because if a stock is giving bullish signal but it is still down, that is not the highest probability trade. I would rather look for buy signals from the stocks that went up. Similarly, the stocks went down, the stocks that went up but gave bearish signal, 8 stocks went up but gave bearish signals. I'm not going to rely on them so much. I'm going to rather take short setups from the stocks that went down. In any case, that information was already in the tabular form that is shown in the bar charts now. It is showing that in terms of bearish signals, 234 stocks went down and gave bearish signals, 8 went up but gave bearish signals. And similarly for bullish side, majority, most of them went up and gave bullish signals, only 2 went down and gave bullish signals. How can it give bullish signals when it went down? That can happen if it is a breakout or headwind setup, when the stock may go down but give bullish signal. But as I mentioned, those are not the best bullish signals. So for best bullish signals, we may rely on the stocks that went up and gave Q signals. For bearish signals, we may rely more on the stocks that went down and gave Q bearish signals. That is how I made the changes in Q Finder, and then there are some changes in the integration between Q Edge Vital Index and Finder. One important thing is, if we look at Q Edge, for example, look at the stocks. In the first column, we have the Reuters or Refinitiv symbols. You will see sometimes the suffix is .n. N means, I think, New York Exchange. So A ticker symbol is added with the suffix New York Stock Exchange, so A.N. However, if we look at Metastock search result, let's look at the search result for the Finder. And if we look at the symbol column, you will see here it uses the suffix K. K is consolidated. So Metastock uses the suffix .k, it seems, here also. K, here also .k. And Refinitiv or Icon, on which Q Edge Vital Index are based, they uses the suffix .n and .k. So earlier, when you looked up the Finder signals from Edge Vital Index, if Finder did not run on .n suffix, you could not look for it. So I improved the integration. So whether there is a match on the suffix or not, it is still able to look up the stock. So for example, if I look up A.N in Finder using the lookup in Finder to see what signals came yesterday. Let's do that. Or to make it more meaningful, why don't I find the 3-star stocks that went up, and I see there is one .n suffix stock that came to the top. These are 3-star, meaning they are of great valuation and very nice earnings growth in the latest quarter. In fact, we had the top two with .n suffix, so that will provide good example for explaining how I can look up them in Q Finder, though the suffix doesn't match. So I'm selecting both of them and clicking on lookup in Q Finder, and see both the stocks came up. Did it come up properly? Yes. So in one case, ryam.n, it looked up as ryam.k, and in another case qep.n, it looked up as simply QEP. So that is a small but very powerful integration. We don't have to make sure that the QH vital index suffixes are same as the metastock symbol suffixes. Another part of this enhanced integration is that not only is it showing me the daily intervals, and automatically it is deciding whether to bring me to the bullish tab or bearish tab. Because I looked up Finder for stocks that went up, it is bringing me to the bullish tab. However, if I go to the bearish tab, it has also looked up the two stocks there. That may help me see that was there any recent bearish signal, and none was there, we can see. Recent signal should be colored with cell color, background cell color, orange or green or blue. So there was no bearish signals recently, bullish signals. Not only does it look up in the daily interval, it also looked up the symbols in the 2 weekly intervals, and I can see there were some bearish signals in recent weeks. And if I look at bullish weekly, yes, there were some recent signals on the bullish side also using the weekly interval. That lookup enhancement has been done across age vital index. So from here, okay, vital doesn't have any stock now. I'll not spend time to look up the stocks. These are very powerful aspects, and now there is probably even more reason to use Q Finder than using Q Elite Radar. Of course, when the symbol list is not so large, then it is useful and faster to use Q Elite Radar. Let me illustrate one example of that. Suppose I looked for these stocks in Q Edge yesterday, the 3-star stocks that went up strongly, and I want to look at the stocks that went up by, let's say, 4% or more. Now Q Elite uses the ticker symbols, but we don't have to go to the rightmost columns to look up the ticker symbol from there. I have seen some people do that, but that is not required. That was already taken care in the Q systems design. You simply highlight the rows of your interest and use the column of your focus to highlight them. For Elite, you click the grid icon here. That looks like a table for radar. So if I click that, it highlights the rows. Again, you don't have to actually highlight them using the heart icon. You just click the grid or radar symbol. It copies not the definitive symbols but the ticker symbols, and you just go to radar and press Ctrl V or right click and paste. That is how I use Q Elite when the symbol list is not so large. What did I do then? I looked for the best fundamental stocks that went up. I got those symbols by clicking the radar or grid action button. came to Elite Trader and pasted them. Then Radar is very much able to handle the workload. Another way I may use Radar is when I have an existing list that is not so large. So one of the custom lists that I have is for liquid options. That list has 212 stocks for now. Radar is able to handle those in real time. So that is another case where I use Q Elite Radar. So if I am using fundamental first approach, or if I am using a symbol list that is small enough, then I use Q Radar. But for majority of the cases, I use Q Finder and I look at the overall picture first. Daily I look at it, of course, and weekly I may or may not look at it during every day. Certainly I look at the weekly picture every weekend. No harm looking at it during the weekdays also, no harm. It just takes another 5 minutes to process them. But daily I look at it every day, and then if it is primarily bullish like it is now, I'll go to the bullish tab using the action button and let me try to combine the breakouts with go with flows. In fact, there are a lot of gap ups, so why don't I combine them, and I see still there are 11 high pressure moves. So let me combine them. The ease with which I can combine multiple signals without losing the data. The data is still there. If I click the alarm clock button, then it is going to show me the signals that came today. Nothing is deleted. Doing the same analysis using Q Elite Radar on TradeStation will be difficult. TradeStation is not so flexible as Finder. So now I have all these stocks. They are automatically sorted by price performance. Now this list is small enough. So I may now use the bring to radar button to get them to TradeStation, or I may use the chart icon to open them in Q Global. Let me open them in Q Global. I like that because I don't like to use the keyboard much. So if I click the chart icon once, it will open all the charts using Q entry daily interval charts, and I will simply look at them. If I decide to analyze further, I will keep them. So this one ESE is very strong. Let me keep it. So I am pressing Ctrl Tab to go to the next one. This is also looking strong. However, there is a watermark resistance nearby. Relatively speaking, the earlier one looks better to me, so let me close it. So now this is of no interest. Relatively speaking, I found already another stock stronger than this, so I'm going to close this chart. That was TMP that I closed. Then the next one, MFC. So I will go through them one by one. The ones that are not of interest, for example, WU has a trendline resistance here, so I'm going to close it. This is also looking good. I will go through them, and the ones that look the best, for example ESC, this is looking very strong. It made a very bullish shape candle. Yesterday broke out of the trendline resistance with bullish flow shown also in the ribbon and with bullish pressure. In this case, the stock is at pendulum or price extreme high. So this may be a stock that breakout traders will be interested in. Why did I keep these charts of interest and not the others? Because now I may click on the menu bar at the top to look at them using the standard weekly daily interval, and here the weekly is also looking very bullish. Relative performance is very strong. So ESC may be a stock of my interest. So I'm going to close all the charts. Let's look up ESC using Q Vital. Remember, in this case we are doing bottom up approach because I started with Q finder, combined multiple bullish signals that went up the most, looked at their charts, found the strongest looking charts giving proper Q trade setup, in this case breakout. This was bottom up. So now I am looking up the fundamentals, and the fundamentals are not very good. It's overvalued with negative earnings growth. So I may not buy it. However, many breakout traders, probably non-Q traders, Q technique says that always align the fundamentals also. So I will not buy it. But if it was strong fundamental, then the last step would be to click the grid icon. Even before clicking the grid icon, I know that the industry was strong in itself. 93% of the 60 peer stocks in industrial machinery went up yesterday. So in itself it was strong. Relatively, was this industry strong yesterday? I clicked the grid icon to find that out. It will take me to Q edge. Relatively speaking, it was neither weak nor strong. It was holding steady. That is how now I can complete the bottom up analysis a little bit more easily because the daily and weekly both insights in Finder are available. Now the market is bullish but overbought. So let's now come back to the regular market analysis. Let's look at the futures again. We saw that all the global markets are bullish, overbought, and today the candles were not so bullish. And this is the E-mini S&P 500 futures again using at a glance template. This is also bullish but near the upper boundary. So what I did yesterday was little bit unusual. Why I am saying that? We already saw from Finder market was very bullish weekly or daily, and if we looked at Q edge, let's go to the home page. All the sectors went up. 93% of industries went up. 84% of S&P 1500 stocks went up. Market was very bullish yesterday. And the up moves were with significant percentages for all the sectors. If we scroll to the right and look at the picture over many periods from 1 day to 1 month, everything is bullish. Very bullish market breadth, and this is of course looking at the sector advance decline, at industry advance decline, stock advance decline, monthly interval to 10 days to 5 days to 2 days of 1 day. Market is very bullish. Global markets are also bullish. Yesterday, Q edge showed that it was bullish, so market breadth was very strong. Q finder showed it was very bullish, so overall stocks went up. And if we look at the mega cap stocks, Tesla to Facebook to Apple also went up. Yes, everything went up yesterday. So small cap, mid cap, large cap, everything went up yesterday. So what I did, I closed many of my long positions yesterday, either partially or fully. What was happening earlier is that sometimes the mega caps were going up and sometimes small caps were going up, and yesterday both went up. That's a bullish sign, but that may also be a sign of too much exuberance, everything going up, while price is at very high and market news is flashing things like Dow made 30,000 plus for the first time. It is making headlines like Tesla is now $500 billion stock. So the people who were late in the game, they are piling on that this is the best chance to buy, not in terms of Q opinion. In terms of Q opinion, if we look at the futures, the best time to buy was here and here. So yesterday I booked profit in several positions. I am also looking at the weakness of one sector, and I shared it yesterday. Let's look at that post first. I shared it on the forum post. By the way, using Microsoft Edge, I am able to look at beautiful pictures every day. Let's go to our website. As I mentioned, I added some foliage color. Happy Thanksgiving. Okay, now let's go back to the post. Not in the forum. Not in the forum. Let's look at the tweets. Didn't I mention about semiconductors yesterday? Here. I tweeted yesterday. Actually, it is in the post also. I was not able to look at it. In the forum, I shared as of early morning, before 10 a.m. New York time, Eastern Standard Time, that semiconductors, which was very strong earlier, weakened a lot in the morning session yesterday. Score turned down to 8, and the pace column was showing deceleration at the same time. So I use QH in real time in this way to look for strongest industries or most accelerating industries, or weakest and or most decelerating industries. So I found semiconductors, and then I looked at some of the stocks. I looked at the chart also that I created from the data. Semiconductors from positive turned negative from 1.35 percentage up move one day earlier. In real time around 10 a.m. it was down by about minus 0.4%. Of course it could change during the day, and because the percentage change turned from up to down, positive to negative, the score of the industry declined yesterday from 58 to 8. And if you look at longer periods from 5-day to 2-day to 1-day to real time, it was steadily declining anyway. That is how, looking at the scorecard, you can see industries weakening even before they turn negative. Then I drill down to some of the stocks in this industry, semiconductors industry, and I saw some of them are overvalued, some of them have negative earnings growth, and if you combine, you could probably find some that are having both overvaluation and negative earnings growth. May be difficult because semiconductors was a very strong industry. As of the morning session, you can see some of the stocks were down, whereas the market was very strong. Whether we look at the market futures, market ETFs, market breadth in Q Edge or Q Finder, everything was very bullish. Mega cap stocks were also bullish, but several semiconductor stocks were down in the morning session. So that led me to comment that if you are holding semiconductor stocks, and many people are bullish for good reason in semiconductor stocks, they may be careful. Whether to exit them or not would depend on whether they are triggering the stop loss level on the charts using Q protection signal. I didn't share that. I left that work to the trader, but let's look at Q Edge, what happened to semiconductor industry. And now I'm doing top down analysis from the Q Edge homepage. I'm clicking this button to drill down to the sector scores. If I wanted to go to the sectors percentages, I could click this button. If I directly wanted to go to industry scores, I could go here, and for industry percentage I could go here. Sometimes I may just go to the stocks directly and look for strongest fundamental stocks. Again, the fundamental first approach. In that case, I could use the peer analysis button. For now, let me go top down, starting from the sector score. Sort by 1-day performance by double clicking. Information technology is at the lower end. So information technology as a sector was weak yesterday. Interesting, no? Because the mega caps went up, the market breadth is very strong. However, when we use Q edge, we see that information technology is not a place to buy right now. As I say, the sector is very broad. It is good to look at it, but to make trading decisions, we may drill down into the industries, because not every industry in a sector will move together. So let's drill down using the cog icon. I'm looking for the semiconductor related industries, and there are two here. At the end of the day also, they closed weak. At least this one showed sizable deceleration. In fact, if I sort by one-day performance, then semiconductors are coming at the lower end. So semiconductors were weak in the beginning of the session and they closed weak also. So you may be cautious about that. There are several stocks where I booked profit. Let's look at some of them. Let me try to find one or two of them from the forum where I booked profit. I mentioned yesterday I booked profit in several stocks. CARG was one of them. I shared it 2 days ago. Around 3 p.m. Eastern Standard Time on that day, and this is using the Q Finder. I saw from Finder that it gave a possible trend following long setup. It was touching memory trend line, bouncing up from memory trend line, and also giving a reversal buy setup. The industry performance, and even if you looked at the alternative industry performance, they turned up from negative to positive, and the score was not getting stronger. Of course, the score was declining, but the percentage was improving. What does it mean? It means that the industry in itself was strengthening, but the other industries were going up even more. That's why the score came down. But the percentage up move, and in fact turning up from negative, was reason enough to consider buying a stock in the industry. Usually I look at the primary industry, but when I know that the stock may be more appropriately described by the alternative industry, then I look at the alternative industry as well. And those are in QH, the industry score and industry percentage score, they show the primary industries, and industry 2 is the alternative industry score, and industry 2 percentage is the alternative industry percentage. Usually I use the primary industries and also the primary sectors, not the secondary sectors or secondary industries. Only when the stock's description, which is available in Q Vital, shows me that I should look for alternative industry, then I use the alternative industry, which is available in QH, both in terms of score and percentage. Very powerful tools. Coming back to the forum post, so I found a strong industry and I found a 3-star candidate. Very strong fundamental stock, great valuation, excellent earnings growth. And I looked at the chart. You could buy right on this day. When it touched the memory support, bounced up from the memory support and gave a bullish flow. The weekly was bullish. It gave a reversal candle as well. You could buy it on this day at market close, or you could buy it next day using fine-tuned chart. So I did that. I bought it using stocks, and my logical profit target would be the upper boundary level or the trend line resistance. Let's see how CARG did yesterday. using Q Elite on TradeStation for that. The buy setup was on this day at close or next day at the open. Profit target was upper boundary or the memory resistance which hit yesterday, and I booked at least partial profit. And if I booked partial profit, the remaining position I have put trailing stop to make sure that I end up with a good profit in the trade even if the stock reverses. That is how, with discipline, once the initial profit target is hit, Q guideline is to book profit, not to be greedy. Now, one exception is if yesterday the price broke out decisively from the trendline resistance and closed near the very high, then I might wait for one more day, or I might put the trailing stop just above the trendline resistance in that case. But here it closed below the trendline resistance at my profit target, so I booked profit. We are at the 1 hour point. I am not going to look at more stocks now. You may continue if you are following me. You may follow me on the forum post. Not only do they give Q-Tech trade setups, but they also show, in my view, a disciplined approach to trading. And I am not trying to make 100%, 70%, 300% profit from a trade, because I think, in my personal view, the people who claim I made 100% profit in a trade, they just got lucky, because at the point of taking the trade, they would never know that. That is not the recipe of success in the stock market. The recipe of success is to take higher probability trades, enter with discipline, exit with discipline. And sometimes we may get lucky, we may get a large percentage profit in trades, including the ones I share here, like CRDF that I shared earlier. But that is not the recipe for success. Recipe for success is just to take higher probability trades. We don't know it will make 100% profit or not. Most of the time it will not make 100% profit, especially if you are trading short term. Whatever be your approach, short term or long term, you are able to use the Q systems. I think you already know that. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session. That will be during the weekend on YouTube Live. I'll announce the time on Twitter. And if you subscribe to the YouTube channel Trading Profitably, you will get notified from there also. Thanks a lot once again. Keep safe and trade profitably. Thank you.